So you have decided that you want to get into crypto to make life-changing money. Where's the money at? Why are you still feeling broke? Well, you're in the right place, but just maybe you misunderstood how things work around here. Just maybe you are doing something that is wrecking your portfolio and your chances of actually getting rich. Now, according to the 2023 Henley and Partners inaugural Crypto Wealth Report, there are approximately 88,200 crypto millionaires worldwide, with more than 40,000 of them holding Bitcoin. Now, with the advent of the bull run, exciting times. I know it's been a bit challenging recently, but the numbers probably higher than they were last year. 88,200 is a big number, though, but there are estimated to be 425 million crypto users worldwide, which means only a small percentage of those people actually made life-changing money. So what gives? Well, this is probably because a lot of investors still have false beliefs, and I want to bust some of these myths in this video. Stay with me until the end, because one of them just might be holding you back from actually making the millions of dollars that other people can make and you can make too. One of the founding fathers, Benjamin Franklin, B. Frank, what's up, man? Once he said that an investment in knowledge pays the best interest. And of course, great wise advice. This quote, given to us a couple hundred years ago, still rings true today. We often hear DYOR, that's do your own research, before investing your hard-earned money into crypto. But do we follow it? Yeah, just ape, right? What could go wrong? Well, a couple of years ago, the Motley Fool, a financial and investment advice company based in the USA, conducted a quiz and found out that the average American lacks even basic investment knowledge. The average person in the USA only got 48% of the questions that they were asking correctly. Now, the questions did not even tackle crypto stuff, which is arguably, of course, even harder once again, since it's a completely new asset class with new technical aspects and rules and all this kind of stuff, right? Sometimes a dozen updates happen every single day in crypto. Is wild. So yeah, if you have decided to enter into this niche, you better be prepared to study hard, to do your homework. You can't expect just to throw money into some new coin and hope that it's going to just triple your portfolio overnight. You might get lucky, but you're probably not going to be the exception. You're probably going to be the rule of people who get their asses handed to them. And while there is a possibility of winning it big, the higher possibility you lose everything if you don't do your homework right. So you have to put in the work. I know it's not sexy, but it's important. The second example is a bit controversial, especially with the Bitcoin maximalists out there, but somebody needs to say it anyway. Look, Bitcoin's the OG. I love me some Bitcoin, but it's not the only game in town. Far from it. Yes, it is the safest cryptocurrency since it has the largest market cap, and big financial institutions like BlackRock and Fidelity, they've given it the stifling embrace that they do. But other projects can also be considered to be blue chips and relatively quote unquote safe plays for crypto. Personally, I think Bitcoin is the gold standard. However, that does not stop me from investing in other projects like Ethereum, Avalanche, Polkadot, Chainlink, right? I also don't shy away from those smaller market cap coins, Jupiter, Beam, Aerodrome, for example. Full portfolio disclosures in the description and the pinned comment on X. But you'll say, but Lark, why risk it? Well, Bitcoin will go to millions after 2030, so why not just go all in and wait? I know it's cliche to say that we are here for the technology and the financial revolution, which we are. It's what makes this asset class so exciting. But we also need to be honest that we're here to make as much ka-ching as we can, all right? Stuff as many of these bad boys in your pocket as you can. Let's go. Now, Bitcoin gives us one of the 2, 3, 5x this cycle. Great. But lesser known projects have potential to give us 10 or even 100x gains. For 2024 alone, Bitcoin grew 68.8% when it reached its 73K all-time high. That's impressive. But according to CoinGecko's research, other narratives like real-world assets, AI, they grew by more than 200% as in all the coins combined just in the first quarter of 2024. And let us not forget, meme coins gave us those mind-boggling 1,300% returns on average. A lot of them, of course, went to zero, but still big numbers, right? Now, let me ask you a question. How much of your asset do you keep on a decentralized exchange? This is the next thing we need to bust. If you keep the majority of all your crypto assets in exchanges, then let me remind you of this line: not your keys, not your coins. Very simple. Let me also remind you of the 2022 FTX collapse. The once very popular crypto exchange failed due to news, of course, that the company was misusing and embezzling customer money. So dumb. All they had to do was not steal people's money and they would have been so rich. Anyway, according to reports, customers of the exchange lost $8 billion. This is a reminder that centralized exchanges are not banks. I'm not saying the banks are better either. Banks also pretty problematic these days since money left in the bank does lose its purchasing power, assuming the bank doesn't collapse. Bank collapses are seeming to happen more and more all the time. If there is any consolation, at least banks do have FDIC insurance up to $250,000 and probably going to get a government bailout anyway. Now, if you have to use exchanges, just transfer what you need to trade or learn how to trade on chain through your own wallet that you control the keys of. Also pretty cool. I know trading on chain, especially in the Ethereum network, can feel like highway robbery, but go use layer 2, go trade on Base, go trade on Arbitrum, go trade on Solana. It costs like a penny in fees. Instead of paying an arm and leg on ETH, use that layer 2 solution or another blockchain. And after trading, you might want to keep your crypto, of course, in a self-custody wallet. Now, look, I've made videos about Jupiter and crypto wallets and all that kind of stuff. I'll leave some links below to that if you want to know more. But before we get into the next myth that we're going to bust that could be holding you back and keeping you broke, let me interrupt the flow real quick to let you know about something that will hopefully help put you on the right side of the equation, which is my newsletter, Wealth Mastery. Every week, we bring you the latest and best money-making insights on airdrops, altcoin news, deep dives on altcoins, NFTs, technical analysis, all kinds of information. You can join our 120,000 plus weekly readers and sign up for free using the link down below in the description or the pinned comment on X. Now, the fourth myth is that crypto is for short-term plays only. Well, if I'm going to be honest here, there is some truth to this. We have seen, of course, several traders out there making millions of dollars in a very short period of time by trading and flipping some meme coin. They put in $500 and they cashed out for $1 million. We also have some active traders who can make a lot of money using high leverage at the right time, right? But this is not the norm for most people in the market. Most of the time, you need to hold that bag for at least a little while before you can cash out. A lot of people want to get rich overnight. If you can have a little bit more patience than that, you're already ahead of most of the market. Now, there's this old chart that suggests that if you want a sure 100% profit, then you need to hold your Bitcoin for around 3.65 years, which also correlates to the 4-year cycle period. Yes, that is long, but you can double your money in 4 years if you leave it in a bank. No, you can't, okay? Obviously, Bitcoin doubles in value faster than gold, faster than the S&P 500. It's the fastest moving horse of the asset classes. And that's not all. Historical data also shows us that buying during the bear market can more than double our money. Once the bull market comes, of course, those bear market purchases are going to seem pretty good. Now, the next one, of course, myth to bust is a bit of source debate for crypto investors. It's either you love it or you hate it, and that's meme coins. Some people call them stupid. Other people call them tokenized culture. It wasn't made to be the next form of money or to change the world. It was originally made as a joke with no utility, Dogecoin, right? However, we cannot deny the amount of money that is being made with meme coins right now. And it feels stupid to me to fade that, to mid-curve that. The first quarter of 2024, meme coins like Dog with Hat and Brett and all these things gained many thousands of percent gains. This niche was 4.6 times more profitable than the next best narrative, which was real world assets. Now, what is causing these price surges, all this craziness to happen? Well, we cannot discount price expectation. After all, again, most people are here for this. But most successful meme coin projects have a dedicated community supporting them, which means that they have a lot of excited people who are going to talk about their bags and hold on to their bags. Do not fade away these tokenized connoisseurs. You can see meme coins as a representation of crypto and of internet culture more broadly. Now, the sixth thing I want to talk about is the belief that everything will just keep going up forever. It's not how it works. If you're thinking of holding for the next 5 or 10 years, then yeah, it's just going to keep going up, right? Longer term. But this only applies to established coins, your brand names, your Bitcoin, your Ethereum, or Solana. Blindly buying a random altcoin will not guarantee you profit, even if you wait a decade. Data suggests that over 50% of crypto projects have died since 2014. And if you expand that out, the vast majority, the other 50% are zombies. You also have to remember that even in a bull market, a 10 to 30% correction is to be expected for Bitcoin, 30 to 70% corrections for altcoins. So keep this in mind, especially when you're using leverage. The last one, personal favorite, influencers are always right. But are they? No, of course not. Obviously not. Look, a lot of influencers, content creators, we're going to call them, can help you to navigate the confusing world of crypto with tutorials, explainer videos, opinion, all that kind of stuff. And you can get ideas from them, but you still need to DYOR. Back to point number one. According to the research paper called Crypto Influencers, following the advice of influencers can often generate negative returns because we're just people too, depending, of course, on the holding period. But still, the more expert the influencers claim to be, the steeper the loss can be. So you have to be aware that the people making videos on YouTube or TikTok or wherever else, they're just investors like you. Okay. They might promise and say, this is definitely going to happen. This is what's going to blah, 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 blah. Chances are they don't know what's going to happen, or maybe they're bullshitting you. They don't know what they're talking about, whatever. Look, at the end of the day, no one has a crystal ball. Not your hedge funds, not your influencers, no one. I certainly don't, and I'm frequently wrong. Okay, I get stuff wrong all the time. I just get enough stuff right that I make money. I really feel the line from Socrates. All I know is that I know nothing. Anyway, just remember, you don't have to be a rocket scientist to be profitable in this market. You just need to have patience and the willingness to learn and to put in the work. And if you do that, then you're ahead of 90% of people in this market. And it might sound simple, but it works. Thanks for watching.